Hello everyone, Trading Algorithms is in touch, I'm Vlad. In this video, I wanted to show the usefulness of the Everec Volatility and Dynamic Levels channel indicators for finding entry points. I'll show you an example of testing this bundle with new robots that I tested in scalping mode on the Chicago Mercantile Exchange oil futures. We will consider part of the American session on Wednesday, March 22nd, or rather 5 favorable situations for scalping. Watch the video to the end, put a like and write a comment on whether you use my indicators for trading. Let's start with a little theory. The first Everec volatility indicator was created to show the places of spikes and contractions of volatility. It works on any frame, but in this case I use it inside the day on a minute chart. The basic idea is that the market is cyclical and spikes in volatility alternate with contractions. I want to be in the market before the volatility spike, and the histogram of the indicator will show the places of compression. When the histogram touches or falls below the yellow midline, for me it is a signal for an approaching surge of volatility. The second indicator, the levels channel speaker, determines for me the current local trend on a tick chart with a period of 50. If the channel is green, then I'm looking for purchases. If the channel is red, I'm looking for sales. By the way, this indicator is available as a robot in a package of indicators from Trading Algorithms. Write to the bot or in the comments to learn more about the indicator package. This chain is closed by trading robots that I am testing. Trading models are already sewn into them, and this greatly simplifies the trading process for me. My experience shows that it is very difficult to trade actively within a day on small time frames, and scalping on an accelerated market is even more difficult. Therefore, robots are a universal solution to the problems of all active intraday traders. I will not dwell on robots in detail, as they are not currently publicly available. If they ever appear, I will make a separate video about it. So, let's move on to the first situation. We see the departure of the volatility histogram below the midline. This is a trigger for action. Until the volatility has decreased, I'm not starting to look for signals. Next, we determine the current trend. The channel has turned red, so I turn on the robot for sale. After a while, a sell signal appears in the form of a down arrow and a sale opens. Since this is a short-term trade, the stop loss should be small, in this case for ticks. On oil, 1 tick costs $10. That is, 100 loss will be $40 plus possible slippage plus commission costs. The price went down by 8 ticks, but the closing occurs in the area of plus 4 ticks per contract. Please note that the price was moving quite actively. I spent no more than a minute on this transaction. This is the goal of the preparatory stage with indicators of volatility and trend. In fact, they increase the chances for me to make a profit the first time, and there is a good chance that the movement will be so strong that it will be possible to close more than 10 profit ticks. The second situation is that volatility has come close to the middle line. The trigger is ready. We look at the trend. It is green, so we turn on the robot for purchases and wait. If the trend turns red, then I will switch the robot to the sales search. After a while, volatility flares up and the purchase closes at plus 23 ticks per contract. This is what I talked about earlier. The expected surge can give quickly and a lot. In this case, it happened. But you should not constantly expect very fast and strong movements. Just directional movement is enough. The third situation is that there is a trigger on volatility again. The trend is talking about purchases. Now the second robot under test is in focus on the left. a buy signal appears and after a while the growth continues. At the peak, the price gave 15 ticks, closing occurs in +8 ticks. The fourth situation is that earlier the histogram dropped below the midline. In the third situation, there was a purchase, but there was still no surge of volatility on the histogram, so there is still a chance to get into momentum. The trend at this moment is lying. We turn on the robot to buy. A purchase was opened, but without giving an impulse, the price reached a stop loss. I get a new downward trend and switch the robot to sell in the hope of a downward momentum. After a while, a down signal appears, a sale opens, the price literally reaches the +12 ticks mark in a minute and a half, +17 ticks in another minute. The transaction lasted about 4 minutes and closed at +10 ticks. And the fifth situation again gives a compression of volatility. We look at the trend. At the beginning it was bearish, the robot was turned on for sale, but the robot did not receive a signal, and a little later the trend changed to bullish. We switch the robot and after a while the purchase opens. When the +10 ticks mark is reached, the transaction is closed. At the peak, the price gave +20 ticks, and literally in a few seconds. As a result, the transaction was active for about a minute. In the end, I would like to say that this section in a few hours was bad from the point of view of trends. As it turned out, the market consolidated on the older time frame before moving into strong trend movements. That is, depending on the luck and duration of your trade, such a bundle can give much stronger impulses, which should lead to large profits. I will also add that it will most likely not work out so neatly on cryptocurrencies because of much larger commissions, as well as the randomness of movements on small charts. Futures are much more stable in this regard. Thank you all for watching. Share this video and like it if you liked the video. Glory to Ukraine, and see you in the following videos.